Hello everyone, welcome to the Alpha Hustle. Here is a weekly analysis of Nifty and Bank Nifty on how market auctioned last week with important references and potential scenarios that may likely to play out in the indices next week. So let's quickly get started.
Alright, so let's start with the review of Nifty. On the monthly charts, the market continues to trade above the Feb highs of 15,524. Market continues to one time frame to the upside with strong momentum from the buyers. So the trend for the longer term time frames is to the upside. We have an interesting action on the weekly charts this week. Market formed an outside day, taking out the highs from the prior week as well as the lows from the prior week. What market tried to do is a retest of the prior all-time highs of 15,524, where the responsive buyers stepped in to push the markets back towards 15,700. So this zone of 15,400 to 15,600 is a strong demand zone to watch out for. So the one time framing to the upside has been stopped. So currently we could call it as a balance. So let's see how the market is likely to open and trade during next week. So the trend for the intermediate time frame is also to the upside, though it's been partially trading sideways. The way the buyers approached today around the prior all-time highs is quite interesting. So let's see how the market is likely to trade next week. So on the daily charts, we had a nice balance. Earlier this week, market started to head towards balance high. However, the buyers really struggled around 15,900 levels. So which is where the responsive sellers stepped in to stop the momentum from the buyers. So with no follow through whatsoever to this balance that we had at 15,909, market started inventory adjustment of the week longs. So what we have is an auction back towards the balance low, where the responsive buyers stepped in to push the market back into the balance. So this is a strong demand candle that we need to watch out for. In case if we would get a continuation above Friday's high, we are likely to head and retest the supply around 15,900 levels. Taking out 15,900, market would approach the psychological reference of 16,000. So it'll be interesting to see whether the buyers would get a follow through to Friday's high and head towards the balance high. So the action that we had this week was primarily the longs liquidating as opposed to the shorts being built up. So this is likely to be called as an inventory adjustment of week longs. So the market kind of fleshed out all the week longs, especially the ones that who accumulated the positions during this zone, which we'll take a look at the details when we look at the market profile charts. What's still pending is this reference to the downside, which is a gap that was left at 15,380 to 15,400. So which is something that has not been revisited yet. However, what market has done was to retest the prior all-time highs. So this confirms that the zones of 15,400 to 15,600 is likely to provide a strong demand. So as long as this holds, buyers would try to buy the dips around these zones to push the markets higher. So in case if 15,500 gets taken out, then the next reference that we're going to look on the downside is a revisit of this gap at 15,380. Now let's look into the market profile charts. So if you are seeing these charts for the first time, I've got a bunch of videos up on my channel, for which I'll leave the link in the description below as well as in the iCard above in case if you're interested to understand what market profile is. So this week started off with a negative bias from the prior week's close. However, the buyers have stepped in around these levels of 15,600 to 15,650 to push the markets higher almost towards prior day's close. So this is a strong momentum by the buyers towards 15,850 levels, where market kind of exhausted earlier. The subsequent day opened with a gap. Sellers failed to fill the gap. However, market had a very narrow range balance. So this is where the buyers and the sellers came into an agreement. Buyers really struggled around the 15,900 levels. So where the responsive sellers stepped in to halt the buyers from heading higher. They remained not so strong too in getting an extension back into the prior day's range. So both the buyers and sellers were in balance. On the subsequent day, we've opened pretty much flat. Buyers tried to probe towards the prior day's dominant point of control, which is a 13-point wide that has been swiftly rejected by the sellers that led the liquidation towards the day's low. On the subsequent day, we have opened lower. The buyers again used this mechanical reference of 15,600 to 15,650 as a zone to buy into the dip, which they did, and tried to rally back towards the previous day's low that has again been rejected with a close pretty much to the low end of the range. On Friday, the market opened with a gap compared to the previous day's settle. However, the buyers failed immediately to take out the prior day's high. So this stopped the auction to the upside and started the auction to the downside. Sellers came into the market that pushed the market to flush out all the weak longs that accumulated on the 9th of June at 15,600, which is a mechanical reference. On the 14th of June, with just 20 points around 15,600 where the buyers bought the dip. Again on the 17th of June where the buyers bought around 15,620. So this confirms that all these buyers who are buying at exact visual references are some weak hands. So all these buyers have been taken out during the auction on Friday, with the market getting short in the hole that led the short covering move back into the balance. Market closed almost towards the high end of the range, suggesting that the weak hands have been taken out from the market and the strong hands now seem to have picked up the bids to head higher. So it'll be interesting to see whether we would get a follow through to Friday's high. In case if we do, we are eventually heading back towards the 15,900 for the retest of the supply, above which we're going to head for the next psychological reference at 16,000. In case if the buyers do not get a follow through to Friday's high or Friday's settle, we may likely to balance 310 point range. And if the sellers come back stronger, we may head towards the retest of the demand at 15,500 and 15,600 levels. So the Bank Nifty continues to be weak. Unlike Nifty, Bank Nifty hasn't made its all-time highs yet. It's still not completely out of the woods. However, the trend on the longer term time frames is still to the upside, with the one time framing still intact. So it'll be interesting to see whether that remains to be the case, or if sellers would try to start one time framing lower back towards 33,000 levels. It is clearly evident that 36,000 is going to be a strong resistance zone. All the rallies that we've been having since Feb have been sold into approaching towards 36,000, 37,000 levels. So we are still struggling within the selling tails that we have in Feb and March. So let's see if the buyers could come back stronger and try to probe towards 36,000 and head higher, or if we continue to kind of balance within this zone before deciding the next course of action. So on the weekly charts, the one time framing to the upside has been stopped during the prior week, and we started one time framing to the downside. So the sellers are in control of the auction on the intermediate term time frame. However, from a broader structure perspective, after making a higher high and a higher low, the buyers failed to make another higher high. So it'll be interesting to see whether we head lower, taking out the swing lows to form a lower low, or the buyers could come back strong and take out 36,000 to form another higher high and correct the bullish structure. So for now, we are trading sideways from an intermediate term time frame perspective. So on the daily charts, however, market continuously struggled to take out 35,500 levels. So this is where the market exhausted, where the buyers exhausted. That started off the inventory adjustment of weak longs towards the prior swing high. On Friday, we saw some strong buyers coming back, pushing the market back towards 34,500. So this 34,000 is likely to act as an important reference for next week. So this zone of 34,000 and 34,500 is important for the buyers to hold for any auction back towards 35,500. If we do get any continuation to Friday's low, we may have a change in the structure in the very short term. So now let's look into the market profile charts. So market has been broadly trading within the balance. So the balance zones being 34,450 to 36,000. So all the dips towards 34,450 were being used by the buyers to buy into, while all rallies towards 35,500 to 36,000 are being sold into. So for the most part of the week, we stayed within this balance, trying to chop around, where on Monday, the dip towards 34,450 has got bought into, where the market headed higher We balanced for a couple of days. So this is the composite balance for 2 days that showed clear signs of exhaustion near 35,500 levels. So this exhaustion by the buyers led the inventory adjustment of the week longs back towards the balance low of 34,450. That dip has again been bought into on the 17th of June. Again, that's a weak reference where the buyers trying to buy at same exact demand. So what market tried to do on Friday was to flush out all these weak buyers out from the market. So strong demand emerged at 34,000 that stopped the sellers to get a continuation to the downside, which triggered a short covering move after the sellers have got short in the hole. So we are closing pretty much towards the highs of today, similar to Nifty. So it is important for the buyers to get a follow through to Friday's high. So the next reference to watch out for the buyers is a zone of 34,900 to 35,000. Acted as a support for multiple days, is now likely to act as a resistance. In case if the buyers come strong, similar to what they did in the second half of Friday, we're likely to head towards the retest of the sellers at the composite point of control at 35,300. Taking out the composite profile, we are heading towards 35,550 to 35,600, where we've got responsive sellers who have stalled the buyers from heading higher. So the supply in the zone will get retested. In case if the market finds acceptance, we are heading towards 36,000. The buyers fail yet again around these references, we're going to fall back towards the 34,500 levels. That's all for today. I hope this information has been helpful. If you find this content useful, please do like, share, and subscribe. Thank you very much. Have a nice weekend.